Oh boy, do I have some sizzling hot tech news for you today. Shopify is on a tear. Shares of the e-commerce powerhouse traded on the NASDAQ under the ticker SHOP have skyrocketed following an exceptional second quarter earnings report and an optimistic outlook for Q3 2024. Let's break it down and see why everyone's buzzing about Shopify today. So first things first, the numbers don't lie. Shopify reported a revenue leap of 21% year over year to hit a solid $2.05 billion, beating the analyst consensus estimate of $2.1 billion. But here's the juicy bit. If you adjust for the sale of its logistics business, that revenue growth shoots up to an impressive 25% year over year. And if that wasn't enough to pop the confetti, their adjusted earnings per share were 26 cents, cruising past the estimated 20 cents. Hitting the glow up button for the third quarter, Shopify anticipates revenue to continue growing at a low to mid-20s percentage rate year over year. They're also expecting a 50 basis point boost in gross margins compared to the second quarter and are projecting GAAP operating expenses to account for 41 to 42% of revenue. And it's not just about cold hard cash. The enthusiasm dripping from Shopify's leadership is palpable. CFO Jeff Hoffmeister cheered, "We drove strong growth in GMV, revenue, and gross profit, all amidst a mixed consumer spend environment." And folks, he wasn't wrong. Gross merchandise volume bumped up 22% to hit $67.2 billion, proving that the underlying business is as robust as ever. Plus, gross payments volume saw a significant hike from $31.7 billion to $41.1 billion, meaning more transactions are happening on Shopify's platform. And for those keeping score at home, the company also dialed up its free cash flow from $97 million to a jaw-dropping $333 million. Talk about securing the bag. Adjusted EPS also jumped from 14 cents last year to 26 cents, knocking it out of the park compared to the consensus at 20 cents. Even on a generally accepted accounting principles basis, Shopify was profitable with a net income of $171 million or 13 cents per share. Investors seem ecstatic about the future projections too. Shopify forecasted revenue growth in the low to mid-20s percentage rate and aimed for a 50 basis points improvement in gross margins. They also expect free cash flow margins to remain strong and are planning considerable marketing investments to keep the growth engine revving. Market analysts from JP Morgan even threw in their 2 cents, lauding Shopify for smashing that important 20% revenue growth line while expanding profit margins. Even though there was a modest sequential deceleration in GMV and GPV, the fact that monthly recurring revenue surged by 12% sequentially highlights that the company's strategies, whether price hikes or new additions, are hitting the mark. So no surprise here, investors couldn't wait to buy in on the good news. Shopify shares surged by over 20%, ticking up to around $65.31. It's clear, Shopify's future looks as strong and vibrant as a fireworks show on the 4th of July. And that's why everyone's talking about Shopify today, from Wall Street to Main Street. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.